Ladies and gentlemen, may I have your attention, please? This is your captain speaking. I hate to do this, interrupt interesting lunch discussions. However, we have another goodie ready for you. It's our second keynote by Dr. John Schindler, who will join us in a moment, essentially reflecting on a core aspect of the authoritarian element in our economy, representing but certainly not speaking on behalf of the Federal Reserve System. I personally look very much forward to hearing what John has to say. As it turns out, I discovered yesterday that both he and I lived at some point in Basel, Switzerland, when I worked for the BIS and John was at the Financial Stability Board. One final housekeeping announcement. There is fresh popcorn, you might smell it already in the air, that you can help yourself to, so it increases, it's complementary, not a substitute for your enjoyment of what John will share with us. And then another important aspect of this event will continue after the final session, which is some networking that we will continue to do after 3 o'clock at the Alexander Black House, to which you all invited, but I'll be sharing more details about this in a moment. So without further ado, let me welcome Dr. John Schindler. Give him a warm round of applause. And I hand over the podium. Thank you, John.
Thanks, Dave.
The clicker is here.
Yep. I don't think I've ever been described as a goodie, but I would prefer the chocolate chip cookie myself, but I'm going to tell my kids that I was described as a goodie. Okay. So thank you very much for having me here today. It's a pleasure to be here. I love to talk about financial innovation. It's something I've been working on for a while. And so when the forum offered this slot, I thought this would be a wonderful opportunity. They did say that I could come to Blacksburg on late April and enjoy the beautiful spring weather, and I'm not sure they held up their part of the bargain there. It was a little bit chilly this morning, but I'm here nonetheless, and hopefully going to say something that will be interesting. So I'm going to explain the title in a minute. I'm not going to go into it right now, but I'm calling this blockchain a foundational innovation. I am from the Federal Reserve Board, and I have a finance and economics background. So this is going to have a financial innovation sort of slant to it. But I hope that what I present will be general enough that those of you who are not in the finance area, who are more sort of purist cryptocurrency or blockchain folks, will find something in here that's useful. I do intend to keep this non-technical. I have no equations in here, nothing like that, so it shouldn't be any finance mumbo-jumbo, that sort of thing. And as you'll see, my kids actually helped me make some of the slides. So hopefully that will add to the simplicity. I have to add this disclaimer. I am an employee of the Federal Reserve Board, but I'm speaking on my own behalf. I'm not representing the views of the Board of Governors or the Federal Reserve System. What I want to do is start with a couple of quotes. The first quote comes from Blythe Masters. Those of you who have a finance background have probably heard of Ms. Masters. She is widely credited with creating the CDS contract, a credit default swap contract. You don't need to know what that is. But some people consider that one of the most influential financial innovations of the past 2 or 3 decades. Some people think it had a role in contributing to the contagion that occurred during the financial crisis. My point in saying this, she was also a very high-ranking executive at JP Morgan. My point in saying is this, she knows something about financial innovation. Okay? And this is a quote that I stole. There's a million quotes from Ms. Masters about blockchain, but this is one. The blockchain is the financial challenge of our time. It's going to change the way that our financial world operates. That's a very powerful statement, okay? Finance goes through changes all the time, but very seldom do you have something that changes the way the financial world operates. And this is not coming from a financial novice. This is not coming from a blockchain enthusiast who hopes to change the world. This is coming from somebody who literally did change the way finance operated once before. Now, she might be a little bit biased. She does now serve as the CEO of Digital Asset Holdings, which is a blockchain company, okay? So I have a second quote. hopefully to reinforce my point here. This comes from Larry Summers. Okay, Larry Summers was the Secretary of the U.S. Treasury a number of years ago. He was the chief economist at the World Bank. He was the president of Harvard University. He was the chairman of the National Economic Council. I think he's currently the director of the Kennedy School at Harvard. I could be wrong on that. This is an incredibly intelligent person. To my knowledge, he has no blockchain affiliations. I could be wrong, but no reason to sort of talk this up if he doesn't believe this, okay? Very no-nonsense person. But read that quote. Is the blockchain technology going to be fundamental? I'm actually going to use the word foundational, but I think we're talking about the same things. I'll have to send him a copy of my paper and get him to fix his vocabulary. I think the answer is overwhelmingly likely to be yes. It's hedged a little bit, but that's even more powerful. He's not limiting himself to finance. And we've had many speakers here today who were talking about non-financial applications. That's very powerful. It's going to change the way. It's a fundamental innovation, okay? I could put a lot of quotes up here, okay? It would all amount to something like this. Everybody is celebrating blockchain now. We hear all about it. It's going to change the world. It's going to shake the foundations. It's going to do all of these things, okay? And I'm not saying yes or no, but what I'd like to do is try to focus on that question. Why the hype? And I'm going to admit that I'm biasing you a little bit in some sense. Hype has sort of a negative connotation, right? Hype almost implies that it's not going to live up to the hype, okay? But I'm not necessarily saying that. Is it going to transform financial markets? If so, why? Is there a way to think about that? So the way I'm going to do that is I'm going to introduce today a concept that I call the depth of financial innovation. As I said, I'm going to speak on the finance side, but I think it's going to be generalizable. I won't talk about the nitty-gritty. If somebody talks about hashes and nonces and Merkle trees and stuff, my eyes are going to glaze over because I can't speak that language. But hopefully, this concept, applied to financial innovation, can be broadened. I'm going to do this, I'm going to start to introduce this concept to you, the depth of financial innovation, using an analogy. And I came up with this analogy, 2 years ago, something like that. I never anticipated being at an engineering school to use this. So if there are any structural engineers in here, I'm going to use a building analogy. It might break down. I apologize. Just sort of suspend your disbelief. It wasn't intended for an engineering audience, but hopefully it works. So I'm going to compare financial innovation to the construction of a building. When you're going to build a building, you're going to start with a foundation, right? Somebody's going to dig a big, deep hole. They're going to fill it with concrete, and that's going to be your foundation. That foundation is going to be there for a long time, typically. We don't tear up foundations very often. We build buildings, we tear them down, but the foundation stays the same, okay? A couple key things. We very rarely change the foundations. Okay, and when we do change the foundations, we're going to make big change. There's a reason we're changing the foundations. And a foundation gives you a sense of what's possible, but it doesn't tell you what's possible. Looking at that foundation, you can look at that and say, that could be a really big building, but there's lots of possibilities. It could be a skyscraper, an office building. It could be all sorts of things. Lots of possibilities. The second thing that we're going to do when we build a building is we're going to build the superstructure. Now, once that superstructure is in place, you can look at that and you can go, yeah, they're building an office building. I can recognize that. Or that very much looks like a parking garage. I see what they're building there. I know what they're going to do, okay? Now, superstructures, they're easier to tear down, right? So I tear them down, I build them up again, I tear them down, I build them up again. But once that superstructure is in place, you can tell what it's going to be, okay? And then I'm going to go to the last step, and I'm going to add all the features of the building, okay? Now, I can add clear windows, I can put tinted windows in, I can landscape, I can put radio towers on top. But when I put those features in, I don't change the fundamental building. If it was going to be an office building and I put on clear glass and then I change that to tinted glass, I don't go, oh my goodness, I have no idea what this is anymore. It's a different thing altogether. It's still an office building. We recognize that, okay? I'm getting closer to getting towards blockchain. I promise I'm getting there, okay? This is where my kids come into play. I speak a lot about financial innovation. My kids are always, hey, Dad, can we help? And, what do you tell to like a 6-year-old boy when he wants to help you with your presentation? You tell him, no, I'm sorry, Max, you can't help me right now. So when I was doing the first draft of this presentation a couple of years ago, Max was there, and I had these little pictures, these little single-family residential coloring page pictures, and he wanted to help. And I was like, you know what? You can actually help Max. So Max and Catherine, my youngest daughter and son, helped here, and our neighbor's child, Susie, helped as well, okay? So that's what we've come up with. On the left, I have a superstructure. This is just a simple family house, okay? We all recognize, looking at that, what that is and what it's going to be. And then over here, I can do all sorts of things to it. I can thatch the roof, I can shingle it, I can paint the roof yellow or blue or whatever it is, okay? None of this changes the fundamental thing. You still know that that's a house. You're not confused about it, okay? Now we start to get into the finance a little bit. On the left there, I have a boring corporate bond. Everybody knows what a corporate bond is, right? Ford Motor Company says we need some money. Give me $1,000, and then every month for the next 10 years, I'm going to pay you $2, okay? At the end of that 10 years, I'm going to give you back your $1,000. This is a corporate bond. This is the debt obligation of an institution, okay? Now, I can do all sorts of things to that corporate bond, okay? There are all sorts of features that I can add to it. One thing I can do is make it callable. I can make it so that Ford Motor Company at any time can call me up and say, you know what? I don't need the money anymore, so I'm going to pay your money back now. Even though it's not 10 years, it's only been 2.5 years, here's your money back. The bond is callable, so you're stuck with it. Now, you might not like that. You might say, well, I don't like that idea. I want to be able to give it back to Ford whenever I want. So you could make a bond that's puttable. So you call up Ford and say, you know what? I don't want to lend you money anymore. I'm going to give you your bond back, okay? That's a puttable bond. An extendable bond. At the end of 10 years, Ford calls you up and says, you know what? I need the money for 2 more years, so I'm going to make this extendable. Okay? These are all features that can be added to a corporate bond. None of them make what is on the left different from what is on the right. These are all corporate bonds. These are just minor innovations, feature-level innovations that change a little bit what you're looking at. When you think about financial innovation, 99%, and I don't have any data to back this up, 99% of all the innovation is this type of innovation. It's kind of superficial. I was at a meeting of the Financial Innovation Network that I mentioned not too long ago when I was sitting here on the panel. And one of my colleagues came up and said, it's great, we now get a report of all the institutions that we supervise and what new products they have every quarter. And he showed me it was like 250 products. And I was like, wow, that's really interesting. He goes, no, it's not. They're all really boring. You know, it was like, this is a corporate bond with a floating rate and a callable option and all sorts of stuff. He said most of it is just completely boring. So what if we want something more interesting? So I'm going to call this genuine innovation. I'm back to my superstructure example. On the left, I have the little bungalow house. On the right, I asked my kids, well, what should I put over here? And they chose a castle, okay? What's important here is that the foundation is the same. If you look at the one on the left and the right, basically about the same size, okay? So I tear down my house, I build a castle, okay? The structural engineer is probably going right now, you know, that foundation isn't going to hold all those rocks, it's going to collapse and stuff, but we're going to ignore that for right now. I can do this. The foundation is the same, but you're not going to confuse these two structures. They are different structures, okay? Nobody's going to question that. What does this mean in finance? On the left, I have the boring corporate bond that I told you about. And I think it was Yoram a few minutes ago who talked about securitizations, okay? So somebody might have come along and said, you know, we've got this bond market infrastructure, and on this bond market infrastructure, people are buying and selling bonds all the time, and those bonds are the obligations of Ford Motor Company. But I have a new idea. You know, I've got all these mortgages. I'm a bank. I've got all these mortgages, and every month people pay me, you know, these payments for their principal and their interest. What I'd like to do is sort of use that and somehow get these mortgages off my book because I've got all these mortgages. I got to diversify somehow. So I'm going to collect all these mortgages together, and I'm going to sort of sell the right to collect that income to somebody else, okay? So they're going to give me $1,000, and in the first month, when the payments come in, I'm going to pay the payments out to them, okay? What we're talking about is the very beginnings of securitization, and I've grossly oversimplified it, okay? This is not a corporate bond in the sense of it's not the obligation of Ford Motor Company in the sense of Ford owes me this money. This is a securitized instrument, so the income is coming from someplace else. I don't have to trust Ford per se. I've got to trust the people who are paying on their mortgages. So this is built on the same foundation. Both of these are traded on the bond market, okay? Same foundation, okay, but two very different products, okay? Now, if you really want to make big change, you've got to change the foundation, okay? I said we do it rarely, but sometimes we do. We rip out the foundation because we had a little bungalow and we want to build a skyscraper, okay? You don't do it often. It's expensive to tear up these things. But if this is the kind of change that you want, you've got to do it. It's very rare. But maybe this is what's going on with blockchain. If you think about that boring corporate bond, 100 years ago, that boring corporate bond was a piece of paper. You literally got a piece of paper. At one point, there were actually little pieces you tore off, and you sent them in, and that gave you the right to receive your payments, okay? We don't use those anymore. Now we send the electronic records that say, John bought this corporate bond, and it sits in a central counterparty or a trade repository, a securities depository. And somebody says, okay, John's owed money this month. It's not Ford Motor Company who's holding those bonds, it's somebody else. But what about blockchain bond issuance? This has already been done by several companies. So a company says, instead of issuing through some sort of existing market, I'm going to issue my bond directly onto the blockchain. Now there's no central counterparty here. There's no piece of paper. What I have is a bond directly on the blockchain. If somebody over there wants to buy it, they can buy it. If somebody over here wants to buy it, they can buy it. They own it. It's on the blockchain. This is a completely different way of handling this sort of financial transaction. If you think back to what Blythe said on that first slide, Blythe Master's slide, she said it's going to change the way the financial world operates. This is the sort of thing that I think they have in mind. This is a foundational innovation. Let me go back to the analogy here. So I'm going to argue that blockchain is a foundation. If you think about it, it's not really a product itself, right? It's a concept. It's a way of handling information or data, okay? But on this foundation, we can build all sorts of products. We've heard about different kinds of digital currencies today. Smart contracts, they don't exist unless you have a blockchain system where you can put that programming onto the blockchain. Decentralized autonomous organizations. Initial coin offerings are huge topics right now, okay? All of these are possible because you have this foundation. If the foundation was paper corporate bonds, you wouldn't have any of these right now. If the foundation was the electronic repositories, the central counterparties, you wouldn't have these right now, okay? But now you have them. And then we're already seeing this superficial innovation around the sides. If you take the idea of cryptocurrencies, sure, everybody knows about Bitcoin, most people know about Ethereum, but there's thousands of cryptocurrencies out there right now. Each of them has slightly different features. It could be the consensus mechanism, it could be the privacy features, it could be the way they control the money supply of it, okay? We're already seeing lots of this innovation. Okay, so I said I was going to stick to finance because that's what I know, but there are a lot of non-finance applications of cryptocurrencies, of blockchain technology, excuse me. I just wanted to mention a few of these because I think some of these are very interesting. On the right, I have a picture of the Burj Khalifa from Dubai. Dubai has proposed putting passport information on a blockchain, okay? That's a very different application. So this is going more towards what Larry Summers' statement said. He didn't talk about finance, he talked about a fundamental change. Everledger is a place where you can go and register diamonds, and if you want to know who owns this diamond, is it a conflict diamond, that sort of thing, the information is on a blockchain by Everledger. Codex is a firm that registers collectibles like art. I collect rare football cards from early 20th century. Pretty rare stuff, so I was kind of interested in this. But this has nothing to do with finance per se. It's a database of who owns what. It establishes the provenance that you want. Now, some things are, a couple of examples that I thought were very interesting. They're sort of a little bit of finance, though. The Monetary Authority of Singapore is now doing trade finance along with some banks on a blockchain. Now, trade finance, for those of you who don't know, is a very paper-intensive process, even in the 21st century. You get invoices from shipping companies that say, we're shipping this to so-and-so, and they want money to borrow to make the payments and that sort of thing, and the banks lend, but what they want to know is, where's the invoice, where's the product, has it gotten to the ship, has it been loaded on the ship, and the amount of money that they pay out changes over time. So what they've done now with the blockchain is they set up live feeds, so they get GPS positioning on, for example, the ship. And they can sort of in real time pay back the person who borrowed money against trade finance. There's no paper involved anymore. Everything's on the blockchain. It's a fascinating change. The Hong Kong Monetary Authority is doing some incredible things, which are sort of on the edge of finance. They're sort of a real estate transaction database that's built on the blockchain. So some very interesting examples. I want to broaden this a little bit. This idea of foundational innovation can also be used to describe other types of financial innovation. So if you think of artificial intelligence, okay, this is not a product in and of itself, but it's a foundation on which I can offer products. For example, new credit and insurance products. One of the ones that I find most interesting here is in China, there's Alibaba, right? This is a like Amazon marketplace where, if I want to sell things, I can list them and somebody else can come and buy them. One of the new services they're offering is through the millions of transactions they have each day, you might want to buy some insurance. If I'm buying a new tie and I need to make sure I have it by Friday, when I'm checking out, I can request, could I get insurance that this tie arrives on time? Now, normally, nobody's going to sell you that sort of insurance. It's too hard to price. There's no way. But because they have millions of transactions a day, maybe not on ties, but on other products that are similar, they're able to use artificial intelligence, cluster analysis, identify how often these types of products are late, and they can price in milliseconds an insurance contract for you. And it's micro insurance, so it might cost you 10 cents, 7 cents, and you can buy insurance that you get the right color, that it arrives on time, that it's not broken, something like that. So this new technology is allowing other things to be built on top of it, new products. I'm assuming nobody's used microinsurance before. I won't take a survey, but I'm pretty sure that's probably true. And then what features will be built on top of that, we don't even know yet. Peer-to-peer technology is another example. Blockchain, in some sense, is a sort of peer-to-peer technology, but I'm going to treat it separately. It used to be if you wanted to get a loan, you went to the bank. Did you have an option? Maybe the guy down the street, named Vinny, who had a tattoo and weighed 240 pounds, he'd lend you some money, okay? But that probably wasn't your first option. Now you can go to online platforms. You can tell them what you want. I want to borrow $10,000 to renovate my bathroom, Maybe you can get a loan for that. Who knows? But on these online platforms, you or I can go there and say, I've got some money. I'd like to lend it out. And this guy's willing to offer 4%. The platform has done some investigation and thinks this guy's a good credit risk. I'm going to do it. It's better than making 0% in the bank right now. All sorts of things like this. Equity crowdfunding, you've all heard of GoFundMe pages, these sorts of things. This technology enables this type of innovation. So financial innovation, to me, is like a building. Most of the innovation that we see is at this feature level. It's very minor, it's insignificant, you don't even notice the difference. It's still a corporate bond in your mind, okay? Every once in a while, you get that superstructure innovation. You get a new product like a credit default swap or a securitization. And then every once in a while, you get foundational innovation. And when I say every once in a while, I'm talking once every 20 or 30 years. It's very rare that we tear out the foundations. But importantly, these deeper changes, the deeper we make the changes, the more potential there is to have profound effects. I want to say potential. So what are some of the counter-arguments? This reminds me very much of the slide that Dr. Clancy, I think, put up earlier today. I was speaking at the IMF last week, and I was speaking about this general topic. And as I was coming down from the podium, somebody I'd known for a number of years, another international regulator who does a lot of payments work, met me. And he and I have not always seen eye to eye. And as I got down, he said, John, I just wanted to let you know that this is the first time I've heard you speak where I didn't disagree with everything you said. And then he said, but most importantly, I just wanted to let you know that blockchain is not a foundational innovation. He said, it's just a new type of database, okay? So I agree with him. This is a new type of database. And at its heart, that's really what it is. We're going to change the way this information is stored. It's going to give us new confidence in the way it's stored. But I actually don't think that that alone, because it's so simple, means that it's not foundational, okay? You can have simple things. Just because I can explain it to you in 30 seconds doesn't mean it doesn't have profound implications. If you think of banknotes, 100 or so years ago, if you were in the United States, you didn't have currency like you have in your wallet right now. Well, maybe you don't have currency anymore, right? You're probably using everything electronically. But you carried around banknotes. You went to your local bank, you made a deposit, they gave you a note, and then you could use those like cash, okay? And then at some point, there was hundreds of these currencies circulating, and somebody said, you know what? Why don't we just have one bank issue the currency, the central bank, and then we can still use these notes. That's a very simple change, right? But it had profound implications for the system, okay? Going back even further, if you think about the origins of our modern banking system, it's one of the ways it came out is a long time ago, if you had gold and you wanted to save it, you didn't want to save it in your house, that's kind of risky, you take it to a goldsmith. You give him your gold, he'd give you a certificate and says, yes, you've given me the gold. And people would exchange these. And the goldsmith would hold your gold. And then at some point he or she realized, you know what? Nobody rushes to me all at the same time to get all the gold. So instead of keeping all the gold, what I could do is sort of keep most of it and loan some of it out. And I could make some money off of this, okay? And with that began our fractional banking system. This is a very simple change, but the entire financial world is based on that fractional banking system that we have. So I agree, it's just a database. I'm oversimplifying, but I don't think that doesn't mean it can't have a foundational effect. So another counter-argument that you come across is that this is just another voice over the internet protocol, okay? No one's going to notice the difference. Okay, in the 1990s, voice over the internet protocol was about there, and everybody said this is going to put all the phone companies out of business because phone calls are just going to be so cheap. I mean, my wife is from South America, so every time she'd call home, it would cost us, like $16, that sort of thing. Now, voice over the internet protocol is everywhere now. Every call you make is probably using VoIP, and some engineer in here can tell me if that's true or not. Okay, nobody has seen all the phone companies go out of business, to my knowledge, and nobody is probably noticing the difference. I notice a little bit because my wife can now talk to her parents for free, so I do notice that, but it's not like I think about it. It's not different. I think blockchain could be like that. Just because we won't notice the difference doesn't mean it doesn't make a change. I was just telling somebody that when I lived in Switzerland, when I wanted to transfer money back home, it would take about 3 days, and it would cost me $50 to $75 to make that transfer. But now there's companies offering services in Switzerland, they weren't at the time, where they will use blockchain technology to transfer my money and deposit it directly into my bank account. It takes a couple of minutes, and I think it's about 25 cents a transaction. So it's the sort of thing where I don't even need to know that they're using blockchain. All I need to know is if I go to UBS in downtown Basel, they'll say, give you $75, and in 3 days, we'll let you know, okay? And it was really nerve-wracking 3 days because you never knew, and you were checking every day, and you just never knew when it was going to show up. But now, a few minutes and 25 cents. That's incredible. So, unless Dan tells me that I've gone over time, I'm going to take a few more minutes. Okay. I was asked if there were some sort of financial and regulatory implications of the blockchain. And I think I can highlight just a few things. The FSB, the Financial Stability Report, did a report last year on the financial stability implications from fintech. So this is fintech broadly defined, of which blockchain is just one possibility. If you're interested, it's public, it's online, you can find it there. They identified 3 priority areas for international cooperation, and I just want to talk about that last one, monitoring macro financial risks, because I think it does have some applications for blockchain. So I'm going to mention an example from the NFL, okay? In the 1980s, early 90s, the NFL allowed free agency, so football players could switch from team to team. And one of the first contracts that was signed was by one of the very prominent players at the time, and he signed for a lot of money, and then he had a clause inserted into his contract that said, I will always be the top paid player at this position, and if somebody else gets outpaid, I get a 5% boost in my pay. And the NFL approved the contract. Everybody knew he was the best. He played for my favorite team at the time, so of course he was the best. Now, another player, very shortly after that, signed a very similar contract that had another one of these contract kickers in it that said, I will be the top paid player. And very quickly, the NFL said, wait a second, we can't have these contracts because instantly the salary is going to skyrocket to infinity. Now, I can't verify that story. Somebody who told me the story asserts that it's true. Somebody else has since told me that it's not true. But the principle, I think, is important. If you think about smart contracts, which we were speaking about earlier, suppose I am interested in getting rid of my Apple stock if the weather in Florida hits 32 degrees, anything, right? I can automate that information into a smart contract so long as I can get a digital feed into that contract. And my contract is going to say, if the weather hits 32 degrees, I want to sell Apple stock. I will sell at whatever price. So I want you to sit me in the order queue at the lowest possible price. So I'm guaranteed to be the first one out there, first one to sell out. Now, if somebody else writes that same contract, what's going to happen if the weather hits 32 degrees in Florida? Instantly, they're both going to race to the bottom. The effective price will drop to zero, okay? That contract on its own doesn't sound bad. I want to get out. I'm going to guarantee that I can get out. But if somebody else writes a similar contract, or some contract in a bizarre way that we don't understand interacts with other variables, we can have macro financial problems. We might have a market that ceases to function, okay? A few years ago, there was a trader at a large investment bank, had created a very interesting set of assumptions about how markets were correlated and traded on that correlation. He made a lot of money. He made one flawed assumption. He assumed that some particular correlation structure couldn't happen. And when that correlation structure actually wound up occurring, he lost $6 billion in a day, okay? So that's the sort of thing where if your assumptions are wrong, even if you've programmed everything perfectly, if there's an underlying assumption that's wrong, you could create problems. And I'm almost done, I promise. So there were 7 other issues listed in the report that merited attention. I want to highlight this first one, the cross-border and legal and regulatory arrangements. Here I think it's very interesting. We talked, I think one of our earlier panelists alluded to this. Think about the blockchain. If I'm a Japanese firm and I issue a bond on a blockchain, and then some investor in the UK buys that, maybe it's a Swedish investor living in the UK buys it, okay? Now the Japanese firm defaults or fails to make an interest payment or something like that. Who's protecting the investor? Whose consumer protection laws apply? Is it the UK? Is it the Swedish laws? I think Yora might have said something about the location. What's the location of the trade? I have no idea where that trade took place. Whose issuing laws apply? Who has to do the due diligence on that issuer? I have no idea. It's not to say that this can't be solved, but it's an issue that needs to be thought about. I have one last one. Assessing and updating the regulatory perimeter. We have a regulatory perimeter. It says if you're in here, these rules and regulations apply. If you're outside of here, these rules don't apply. Now with fintech and tech fins, a lot of the firms are coming right up to that edge. They're making loans, for example, but they're not taking deposits, or they're engaging in some sort of leverage or maturity transformation, but not as much as other firms, okay? And then the question is, should they be regulated, okay? If not, what are the firms inside the regulatory perimeter going to do? They're going to switch to the activities that are taking place outside. Maybe you say that's good, because I don't think those are risky activities. But financial markets tend to include inherently risky activities. As I think Dan said earlier today, there's a transfer of risk that goes on in every financial transaction, okay? So again, not an insurmountable problem per se, but it's a problem that we need to be thinking about. And with that, I'm done. Thank you very much for your attention.